Hello, agents. Hello, everyone. And as we approach April 2025, I have my pick MYGA, one of the better ones I see coming out as of right now for April 2025. So let's go ahead and dive into what, like, say, a $500,000 premium could do for accumulation, hey, and guaranteed income. And let's look at the difference of why monthly income, when you take it monthly, will have a different result than annual accumulation. So let's go ahead and jump into this. This is going to be for the 545 for 6 years guaranteed MYGA, just announced for April of 2025. So this is some good stuff. So let's just break into this flyer I created regarding this. And it, as you can see, this is the first feature I talk about is client friendliness. Why is this client friendly? Well, it's got a full death benefit. So of course, the 100% of the accumulation value, God forbid someone dies, would go to the beneficiary, the named beneficiary, right? So that's the first client friendly feature. Next, this allows interest withdrawals starting after 1 month. So immediately you can start accessing the earnings you're making in this annuity. So that's client friendly. Then after the first year, you can access up to 10% of the total accumulation value in any given year. So after the first year, you can access 10% for whatever reason, better yield elsewhere, need the funds, was part of the plan in the first place. So those are some of the client-friendly features. Now, when we talk about the term, it's a set 6-year term. And this is probably the biggest negative about the product is that at the end of the 6 years, the client, you must make a decision, agents and clients, at the end of the 6 years, whether you want to stay or lock in, like pull those gains out, because it has a 30-day exit window before the surrender charges right here will re-up. So you have 30 days. So what happens in this 30-day window is usually the company will say, hey, we're offering for the next 6 years a rate of 2.8. And you're like, no, I don't want that. Let's bail out. Or maybe they come out at 6 for 6 and you're like, oh, let's stay. So they'll give you that option, but you'll have 30-day window and plenty of notification up to make that decision. So that's the biggest negative on this. And that's a new feature of MYGAs. Didn't used to be that way. This product can be started with as little as 5,000 qualified, or, with IRA season coming up. So that's an option. But remember, the rate is 30 basis points lower if you're under 100,000 of premium. So it will be 515. Still a fabulous rate, still all the same features. And you can use it for IRA that way. Also non-qualified, it's 10,000 minimum. And then at 100,000, you get those higher rates, and it caps out $1 million of maximum premium without company approval. Commission, fees, charges, everything is built in. So the numbers you're seeing here are all guaranteed after everything. It's not like there's a fee going to come out and you don't really know what's going on. I'll tell you exactly what's going on because the commission's 2.5% up to age 80 and reduces from 80 to 81 to 85, and again from 86 to 90. And those are available agents if you need them. But I think it's like 1.88% on the 81 to 85 rate. And then it really drops off at 81 to 90 because it does have that full death benefit and all those client-friendly features. Safety, remember, you're only as safe as the claims paying ability of your insurance company. So can the insurance company pay all claims? So you look at that, and the rating agencies will give a rating based on how a company can weather a financial storm. So if the entire planet has a financial storm, this rating is telling you basically how much of this financial storm or how well they'll be able to handle it. So A- is considered an excellent rating. They can excellently handle any type of financial feature. That's the idea of the A-. They're also a B- with the company Weiss, which is very hard to get a B- with. So it's considered a good rating there as well. So the company has 15 billion in admitted assets and a large 9.7% of that in surplus, according to the financials I'm reading. So products not approved in these areas, DC, New York, Puerto Rico, all the territories it's not approved. And if you want an agent kit, you can, what you can do is go to my LinkedIn page and I'll have the PDF of this and you can download it from there and, use all the features from that. All right. So that's the first page. Let's look at page 2, and this is for the accumulation. So 5.45 accumulating, if you leave it to accumulate, you will get 27,500 the first year in interest, 28,735 the next year. Why is it higher every year? Why do these numbers go up each year? Because your interest is earning interest. That's called compounding. When interest earned interest, it's compounding. So you get 27.5, 28, 30, 31, 33, 35. You see it goes up every year because interest is earning interest. So important for interest to earn interest. That's the compounding part of it. Next, so that's going to earn $187,000 on a $500,000 premium. Not too shabby, guaranteed 187 grand. That can buy a lot of stuff. That's 37.49%. Guaranteed day one. You just put it in, you know you're going to earn it. Don't touch it. You earn 37.49. Guaranteed. It's not going to change. It's all set in stone. There's no fees, no charges, nothing. All built in. That commission of $250 in the beginning, it's all built into these numbers you're seeing. It's very different than a charging, where you don't know what you're going to get. Next, we have the income illustration. So $500,000, if you want to strip the interest immediately, it's going to be $26,592 annually. Now you might say, wait a minute, the page before said I was getting $27,250. And this one says I'm getting $26,500. Why? Because you're taking money out every month. So in a 28-day month, you're taking $2,000 out. In a 30-day month, you're taking $21.85. And on the 31-day month, it's $22.58. So that $22.58, if you take it out in the first month, that's 11 months of it not earning 5.45. And that is why it's less than the just leaving it to accumulate, $27,250, because every month you're earning. So this is how it would work out. You'd earn $26,592 annually, and based on how many days of deferral, 28-day February, other months of 30, and the 31-day months, right? And there's 7 of those 31-day months. There's 5 of the 30, and there's 1 28-day month. Leap year and all that. It's going to change, and there's a factor. It's like $14 and something cents per 100,000, a daily factor I use to get to these. So yeah, but this gives you generally 28, 30 to 31 days, what you can expect in that month. So as you see, it's different than an immediate annuity where it gives you the same amount every month. The interest only will change every month because there's different days in the month and different deferral. But this is all guaranteed. You'll earn that at the end of the year. It's $26,592. Doesn't matter how it comes out. That's what you'll get at the end of the year. Here's the illustration. Here's my breakdown. That's how it works. So there's interest withdrawals on $500,000. Oh, and the death benefit, if the person should die anytime during the 6 years, $500,000. So that's all guaranteed. So you know that there's no risk of principal in this, right? Because unless you surrender it early, that's the only time you could have a problem. So same thing I've said in the past. If you break the deal, it's expensive. It's like if you buy an airline ticket from California to Florida, you try to get out over Texas, you're going to have major problems, right? Okay, so that's the same thing here. You don't want to leave early from your MYGA, FIA, any annuity, really. So ask your clients these 4 questions if they have $500,000. First of all, how much are you hoping to earn in 6 years on your $500,000? If they say, I'm hoping to double it, I can't help you. If they say something like 22%, or I'd be happy to make 5% a year, or 20% when it's all done, or 30% when it's all done. Well, as long as that number's under 37.49%, you got a sale, in my opinion, because you say, I'll guarantee you 37.49 right now, because I got 5.45% rate for 6 years, and that guarantees you 37.49%. It's $187,000. Mr. Client, would you like to make $187,000 of interest without thinking about it? Just put in the money, and after 6 years, you made $187,463. Right? And if any of the answers are yes to this, you got a MYGA sale. Stop there and grab an app. Are you okay with the tax deferral on your interest until you withdraw it? So not like at the bank where you get a 1099 every year. We're not going to tax you on that $187,000. So if you roll it over again in 6 years to another annuity, you can keep deferring your taxes. So it's only taxable when you take it out, right? And it's non-qualified money we're talking about here, but really it's qualified money as well. It's all taxable when you take it out. So yeah, that's the 4 questions you should ask a MYGA client or any investment client. If they're trying to get way more than 37.49, they're going to have to take on more risk than a guarantee, right? So if they're at 38, hey, you want to take risk for 1%, or, no. If they're super high at 50, 60%, you can't help them in an annuity, guaranteed wise. You can do some assumptions and this and that, but nothing we can do on a guaranteed level. So anyway, what's that? Next is, you need a quote. Go to annuityexperts.com, click on that MYGA rates, and I'll pull up a deferred annuity illustration, and that's my last page. Yeah, so that's the end of my presentation. We're getting near 10 minutes here, so that was pretty long, but no fees, just insurance guarantees. X YouTube, LinkedIn for the most up-to-date information. Thanks for watching, agents. April looks pretty good right now, but remember, everything can change. We got to watch those bond rates. So as of right now, 5.45 looks good, but keep in touch and keep looking. So take care. Thanks for watching. Bye-bye.